Welcome to this market and economic update for the month of May. May was an exciting month that included new stock market all-time highs, rising interest rates, and new leadership at the Federal Reserve. May was a strong month for investors with indices reaching new all-time highs. At the same time, the bond market encountered new headwinds with changing inflation expectation and rising longer-term interest rates. On top of all that, the Fed welcomed its first new chair since 2018. So there's a lot to get into. Let's talk about it.
Let's begin with interest rates, which were one of the more important stories of the month. 30-year treasuries by about mid-May reached their highest level in about 2 decades of 5.18% before moderating closer to about 5 by month's end. The primary driver of this was hotter inflation data. Both producer and consumer prices came in higher than expected, which pushed inflation higher. Now, on top of all of that, we also have an ongoing conflict in Iran. Now, although expectations over oil prices moderated toward month's end, which brought down future inflation expectation, these rising inflation calls have continued to push interest rates higher. Now, for consumer, this means higher mortgages, higher auto loans, anything having to do with credit is getting more expensive. Very similar with businesses, cost of expansion, cost of operations, all of this coming more expensive, which makes it more difficult to operate. Now, on the flip side of that, for investors, this can be a double-edged sword, because if you have a diversified portfolio and you own bonds, you are now getting paid more money to be a bond holder. So a little bit of good news and bad news in this situation. As we can see from this chart, while interest rates have risen, we are still far below the historic highs that we've reached in years past. Despite the challenges facing interest rates, the stock market did surprisingly well in the month of May. Strong market performance generated a ton of enthusiasm around IPOs. Although this generates a lot of excitement for day one of trading of these companies, if we look at our largest tech names that we've come to love today, their performance post-IPO has become far more important than their initial day of trading. As this chart illustrates, the S&P 500 PE ratio currently stands at approximately 20.9. That remains well within the range we've seen in recent years and reflects that strong corporate earnings have helped support valuations. Now, at the end of the day, maintaining diversification across sectors and styles can really help us manage risk and still participate in market gains. One of the most significant developments this month was the change in leadership at the Federal Reserve. Kevin Warsh was sworn in as the new Fed chair, succeeding Jerome Powell. Warsh previously served on the Fed during the 2008 crises and is well known within financial markets. He is generally viewed as a reform-minded leader who is interested in maintaining a smaller, more focused Federal Reserve. Leadership changes at the Fed are intentionally infrequent, and they generally prompt questions about the future direction of monetary policy. This environment that Warsh inherits is a complex one. You have an economy that is generally healthy, but you have rising inflation paired with a labor market that's giving us some mixed signals here. Now, at the end of the day, as this chart shows, we've gone through many different Fed chairs, many economic cycles, and many different political environments. The US economy has continued to grow through all of these. So that concludes our monthly market update. If you're interested in more videos like these or the full-length economic articles that we write, feel free to check out our blog post link below or give us a call. Thank you.